Last year was an extraordinary year for the oil and gas industry as the COVID-19 pandemic hit the global demand, leading to a fall in oil prices. Companies responded swiftly by slashing their budgets and delaying upcoming project sanctioning decisions. As we move into a post-COVID environment, Africa's abundant natural gas reserve with discovered volume standing at 600 TCF can help satisfy continent's future energy demand. Even as organizations step up efforts to work for a just and inclusive energy transition, a deeper dive into Africa's regional electricity generation mix is expected. Conventional fuels such as coal, oil and natural gas collectively accounted for 75% of Africa's power generation between 2019 and 2021. Under the IEA's net zero emission scenario, oil and gas production could also drop by 67% in Africa by 2050. In order to accelerate and achieve an inclusive energy mix and eradicate energy poverty by 2030, the Chamber recommends solving the challenge of scaling key technologies in support of the global energy transition. Increase a gas-to-power generations to help move away from other more polluting conventional fuels. Implement a multi-pronged approach to addressing energy poverty, one that harnesses both renewable energy source and fossil fuels. And finally, cut the red tape to create a more enabled environment for the public sector and investors. Oil will retain its number one position in the energy mix for years to come. With our eye for the future, the African Energy Chamber remains committed to helping NOC and IOCS to navigate a complex and ever-changing African landscape in light to our State of Africa's Energy Report 2022.
Good afternoon from Johannesburg, South Africa. Good morning in Houston, and good day wherever you are. I am NJ Ayub, the Executive Chair of the African Energy Chamber. It is my honor today to be with you at the launching of the State of Africa Energy, the African Energy Chamber's Outlook for 2022. Today could not have been any better when we have a distinguished group of panelists, mainly from our advisory board. They are brilliant, smarter, and we could take a lot of cues from them and learn from them. And we would have today with us to discuss our outlook, my good friend Dean, from the chief economist from the API, that's the American Petroleum Institute. I think I probably need to stop using industry language. Rolake, she needs no introduction, just as Nosiwe. These three have done an amazing job in driving where the chamber stands today to keep us focused on our main ideas that has been driving up Africa's energy sector, pushing that we have a unique African energy mix that would benefit all Africans, but also the investors that take the risk and exposure and put money in our continent. So thank you so much, and I look forward to starting this Outlook launch very soon. Africa in 2022 is going to be an Africa that we see as a challenging here. But our outlook talks a lot about where we are going, where our future would happen. COVID-19, COP26 are going to change and also drive a lot of debate around our energy future. An energy future that in a continent with 1 billion plus people, energy poverty is real. 600 million people without any access to energy, 900 million without clean cooking, a global surge and a global consciousness in keeping a clean environment and driving climate activities. But also as our economies wake up and try to survive from the COVID-19 pandemic, the question would be, where is our energy industry? Our energy industry is that key driver that would drive industrialization, that would also drive jobs, and that would also drive revenues for states. But that industry is at a crossroad where we see the environment being part of it. Nobody loves the environment more than we do. But also we see environmental issues creeping in when it comes to investment. And Africa is in a position where we have to mitigate that and still drive that. Let's not forget issues around local content, women empowerment, creating jobs and investment in countries should not be put at the back burner. The State of African Energy, the African Energy Chamber Outlook, outlines a lot of where we see the industry going. We see an industry's resurgence by 2023, 2024 to back to pre-COVID industry investment. We've seen a drop in exploration in the continent. Some could say part of that came out of COVID-19 concerns or problems arising out of COVID-19. Some could say it has been as part of a global decline in investment in exploration. But we've also seen progress made in some mergers and acquisition. Those mergers we saw a forward move towards success coming out of Uganda with the $3.5 to almost $5 billion projects with Total. We've seen some movement around Libya, and we've seen a constant move around the MSGBC basins with Senegal and talking about the GTA and also the SNE with Woodside. But beyond that, power projects still lag behind. The numbers have not improved better. But moving from that, we will see with our great panel how these conversations will take place and what we will see for 2022. Some of you might get access to our report. Normally I should charge you, but we will not. But that's also part of why you love your dear chamber. But regulations have not always been our best. We've seen progress. I believe it's 20 years late with the Petroleum Industry Act in Nigeria. We at the chamber welcome it. We do welcome this landmark signing of this Petroleum Industry Act by President Buhari in Nigeria. Nobody could disagree with us that Nigeria had lost a lot of opportunity over the last 20 years because of the stalling and the politics that got into the legislation. But today we welcome it, and we hope to see a lot more progress. We hope to see a drive in investor sentiments and investor enthusiasm into that market. Why do we say that? That could be Africa's largest gas market. Nigerian LNG has gone from 1 train to 7 trains. We think with a big emphasis on gas, we would see gas as a transition fuel that would drive that. We've also seen regulatory setbacks around the CEMAC zone, where there's a forex regulation that is set to cripple most of the oil producers and operators there. Yes, stability and energy security are part of the issues. It's not just about who drills for oil or who drills for gas or who builds power projects. Mozambique has seen this year in 2021, we saw a force majeure that actually stopped Total from continuing its investment projects. We hope that in 2022, we could see progress on Total getting off force majeure. I would invite you to listen very carefully to our panelists. I would invite you to listen and also ask questions. They're smarter, they're better, and they would also drive us on a dialogue on where we are today and where we're going tomorrow, especially in 2022. 2022 could not be more exciting. And I think we, with the 3 distinguished panelists we have here, it will call for good debate and also good delving into the issues around what we bring with this outlook. So thank you so much, and I welcome you to this. Our first panelist you hear today will hear a discussion from Nosikwe, who has not only been a part of the Chamber Advisory Board, but one of the first women in our continent to run a national oil company, PetroS. She has been part of this industry, and this industry has been part of her soul. So Nosikwe, thank you so much for being here with us, and it didn't take her 5 minutes to accept to join us to share her thoughts about our Africa energy outlook for 2022. Thank you.
Thank you. Good afternoon, NJ. Good afternoon, fellow panelists, and good afternoon to our esteemed guests who are listening in onto this webinar. You know, NJ, you covered the introduction so well that I was thinking to myself, okay, he's generally covered what I was going to say, but you set the scene so well because you ended off with some encouraging words. Yes, 2020, 2021 have really been exceptionally difficult years for the industry, as we know, from all aspects. Crude price that you spoke about, the decrease in capex, the force majeures that were declared, sanctioning of projects, and so on. But you know, when I looked at the outlook and all the good work that has gone into it, I am actually left encouraged for 2022. Yes, in certain areas, the prognosis might not be as good as we had it last year in the outlook for 2021. Some of those numbers have changed, but by and large, one can see that there are some green shoots, which green shoots should be taken advantage of for the good of this, for the African continent. So maybe just to mention a few of these green shoots. For example, in the 2021, I think, yes, in 2021, there wasn't a lot of activity in terms of exploration. And in fact, from the oil exploration perspective, we didn't have any high impact wells which were drilled. But what is encouraging is that in 2022, there are going to be at least 13 high impact wells which will be drilled, compared to the one. In fact, I think 2021 there was one and it was not commercial. So that is encouraging. It is also important to note that there are also going to be a couple of licensing rounds throughout the continent. And, you know, those blocks which are on offer, which will come on offer in 2022, start to bode well in terms of the investments that can be made into the different blocks. I know that there is a huge shift in terms of the finances or the investors, because we're talking about the energy transition and we're talking about the financing companies, because of the different regulations in Europe, are looking at moving away from fossil fuels. And in fact, what they're starting to do now is that they're transitioning. Their spend is changing from crude oil and moving into more into the gas arena. But having said that, when we looked at the demand from Asia, it's clear that there might be an uptake of financiers coming more from Asia than was traditionally what used to happen in Africa, where most of these financiers were from Europe. But given all the issues that mentioned by NJ, we are seeing that there's a decline in capital expenditure from the European side. But what is encouraging, again, as I say, I'm all for looking for these green shoots where we can take advantage of them as a continent. Is that perhaps we'll see that the financiers will now become, come more from Asia, as it were. And in terms of the this complex situation that we find ourselves in, where the rest of the world is moving at a particular pace in terms of, the transition, the energy transition, that pace is not a positive for Africa at this point in time. Obviously, we know that we have energy poverty in Africa, and we do know that a lot of the hydrocarbon resources are also found on the continent. So the issue is how to balance being responsible and trying to move with this energy transition, but at the same time, taking advantage of the hydrocarbon resources that Africa is so rich in, to be able to, one, move away from this energy poverty that we keep talking about. So there is a balancing act that needs to be done there. And in the outlook, it very clearly demonstrates what is happening, where there are opportunities, and what it is that would need to be done so that we as a continent can take advantage of, let's say, move more towards, exploitation of the gas projects, so that we can very quickly be able to have a socio-economic impact by using, the gas as gas to power for gas to power generation. So I'm encouraged again in the outlook, as I say, there is a lot of detail in terms of from a timing perspective, when are these projects coming on stream, and hopefully, FIDs that will be taken for some of those that have not been taken, final investment decisions. Sorry, you said we mustn't use these acronyms. So I'm encouraged by the fact that, because of the fact that in Africa, there is going to, currently the demand is low, but that is also, it's growing. The demand is growing for gas to power projects, not only on the continent, but internationally as well. So over time, there could be an increase in terms of the demand. We see that there's going to be an increased demand for gas as over time, and this bodes well, obviously, for the future of LNG projects on the continent, like Coral FLNG in Mozambique, like Nigeria LNG 7th train, and other gas projects that were mentioned by NJ. So I think that that is a green shoot, and that's encouraging. Because natural gas, as we know, it accounts for about more than 75% of these carbons that were discovered in Africa in the last 10 years. So everything is in place from that perspective for Africa to be a gas-driven industrial hub. And I think those are some of the things that need to be discussed at different policy levels and at different fora in terms of how to better exploit the use of this natural gas as a transition fuel towards net zero at some point. We are saying, at least from my perspective, I'm saying the pressure of net zero should not be moving at the same pace as it is in certain mature countries, for example, countries in Europe. So I think there's a lot of discussion that needs to happen. You mentioned COP20. A lot of influence and lobbying has to be made at COP20, so that as the world is moving along this transition, the pace at which Africa can move should also be taken into consideration, and Africa should not be prejudiced. And that's where I'm coming from, to say the green shoots are there. Let these green shoots be taken advantage of by the different countries. I just wanted also to state that, yes, from a renewable energy perspective, we do understand that eventually we will get to that, to the required levels. And it's pleasing to note as well that there is a lot of work being done on the renewables as well. In particular, photovoltaic. In particular, in photovoltaic industry is starting to pick up, and what that obviously means is that the price of the solar energy is also going to become competitive as time goes on. South Africa, I know, is quite moving quite aggressively with the photovoltaic and solar energy issue, obviously because of the challenges that we all understand exist in South Africa, but parallel with trying to deal with the energy issues, they're also moving quite at an acceptable pace in terms of the solar energy. So when we look at the outlook, I think I'd like to first commend the Africa Energy Chamber, because I imagine that was a lot of work that went into the research. It's very detailed. It goes down into the nub of the matters. It deals with things in a factual manner. And it also shows that if there can be better regional cooperation between the countries in Africa and try to make the market, to try and make the market as big as you possibly can, then I think that quite a lot of these projects, or quite a lot of the work that is currently envisaged for 2022, will start to benefit not only different pockets of the continent, but will benefit at a regional level. So I think I'm looking at my time, I think I've gone over the minutes that I was allocated. But I think just as a start, maybe that's what I just wanted to comment in terms of the outlook 2022. Thank you, NJ.
Thank you, Nosiwe. I think there are benefits going first, so you get that benefit, and I really commend you for your depth and I think the optimism being shared, but also the caveats that we do see, and I think you brought some of that out. And without further ado, I would go to my good friend in Washington, Dean Foreman from the American Petroleum Institute. Dean, please go ahead.
Thank you, NJ. Good afternoon. So I share some of Nosiwe's optimism, but I also recognize that there's a call to action here in this outlook to address current challenges and really think forward. The outlook's describing Africa and the challenges that it's faced in the wake of the 2020 COVID-19 recession. And it's remarkable that not only did it suffer, but it's also lagging in the recovery coming back. And I think that's just realism that we need to recognize that's coming out in the data as they speak. And this is really a particular concern when we're talking about energy that's essential to the continent's human and economic development. And the view that's embedded within the outlook, it affirms that there's a really strong demand right now for natural gas, both on the continent and globally. It also anticipates a greater slack in global oil demand and a slack in prices, actually, that are well below recent levels, as well as those that are recently projected by the U.S. Energy Information Administration. So the undercurrent for prices here and this nexus between global supply and global demand for these commodities really comes back to economic growth. And when we look at what's happening globally, the numbers this year have been scorching hot, with $20 trillion of global economic stimulus, lots of liquidity. We've never seen anything like this. And we've got roughly 5% economic growth on a global basis, market exchange rate basis this year, that's expected to be followed by 2 consecutive years of above average growth. Whether you look at the IMF, the World Bank, the Bloomberg Consensus, that much is clear. And when you see this, if we learned any lesson out of the 2020 COVID-19 recession, it's that when the economy went down, energy demand went hand in hand with it. And as we've come back, we now have a record demand recovery with supply that just physically hasn't been able to move as quickly. We can go into some of the reasons for that. Coupled now with a record low in the energy industry's investment, the capital investment that's been flowing in. Record demand, supply not as fast, investment at a record low. And that disconnect is part of what we're seeing show up in prices. Now, global oil as a market is relatively well supplied today. And there are questions of if the economy continues to grow and you have to compensate and supply that growth and compensate for the natural decline in oil production, there are questions going into next year about how those things flange. For global gas, we see today, before any evidence of a cold winter, that global gas markets are in disarray. We have unprecedentedly high global prices for natural gas in Europe and Asia, and lots of questions about whether the price volatility that's appearing now as part of this will actually repress future demand and utilities, global utilities' ability and trust to rely on, one, being able to get it when they need it, and two, being able to pay, their willingness and ability to pay through price volatility that we've seen over the last decade has historically been muted as a result of this plentiful era of energy that we've been in. So that's the backdrop for this. And with it, when we have a combination of demand outpacing supply, globally lower inventories, higher imports in many cases from many countries, historically, that's been a recipe for even higher prices or upward price pressure. From an industry perspective, in many ways, the proverbial damage is done here. So outside of spare capacity on the liquid side for OPEC and the United States, where with unconventional oil and gas developments in a relatively short period, you can invest and bring resources to market. Most of the resources on the African continent and globally are conventional, not unconventional, and can take years to develop. So when we've seen drilling programs and large capital projects and liquefied natural gas facilities, export terminals get delayed, it's really hard from a global perspective to catch up from that. So if demand continues, if the economy remains on track, if high prices and price inflation don't derail that growth, the underlying need for the commodity is there. And the question is, can supply step up and respond to that? So also from an industry perspective, thinking about the structure and how it's changing. Those economies on the continent that are consumers versus producers have different challenges. And if you're thinking about the relationship back to companies in the industry, those who play in the international value chains versus those that supply primarily for domestic consumption have very different incentives here. So this is the near term, and as an economist, I think of the long term when we talk about long-term and environmental challenges in the energy transition, the long term being made up of many short terms. You have to get from here to there. And then the challenge is how you invest in this, how you have sustainable financing to go with it, and how all of this, as the African continent needs the ability to develop and finance its own resources, how it has that ability continuing to mesh with net zero emissions to 2050 aspirations from the IEA and globally. So the plan for the energy transition, the ability to participate in a greater share of the value chain domestically, whether it's in oil or gas, and the report goes into the rare earth mineral sector and how that may grow. Capturing part of that value chain is also an equally important challenge for the continent. So there's a need to strike a really delicate balance here and to sustain a strong sense of self-determination. I think that's the theme that sticks out to me the most in the outlook, is that we have some challenges today that we can look past, but we can't assume naturally go away, with the optimism that we're talking about, that the demand, the growth, the potential is so great. We just have to pragmatically address the constraints that might hinder the continent from achieving its objectives here. So with that, I'd welcome questions. Thank you.
Thank you, Dean. I think one of my biggest takeouts is what you expect with market demand and growth that is yet to come. I'm being more optimistic that we are going to see growth, and with looking at where economies have been, especially pre-COVID, and seeing where demand is right now, and also key caveats around financing of conventional oil. That is something which I believe we have to deal with. Rolake, who I know the best way to describe her, friend of everybody, friend to no one. And I would pass you the floor right now. And we would get your introductory remarks before we get to the audience. Thank you, Rolake, for really being here. I know she's always super busy, but she rarely tells you no. And that should tell you about how much she has been so committed to the success of not only the African Energy Chamber, but for so many around the continent that do see this industry and being a short, strong mentor to a lot of us. So thank you, Rolake, for being here. The floor is yours.
Thank you very much, NJ. And I must also commend Nsizwe and Dean for making my work very, very easy, for setting the context up so beautifully, both in terms of business, government, the technical aspects, and the market fundamentals. So I want to pose a question as I reflect on the findings of the State of Energy report, and it's a brilliant summary of the state of African energy. Is can we achieve energy poverty, making energy poverty history at all costs by 2030, but also simultaneously achieve net zero at all costs by 2050? And I think when Nsizwe and Dean mentioned this delicate balance, both of them echoed that sentiment, and I think it's a sentiment I share. The question then becomes for me which agenda we need to prioritize insofar as the African continent is concerned. We know what the energy outlook that African Energy Chamber has put out states about more than 580 million people having no access to electricity that is reliable, sustainable, efficient, affordable. And we know that we have to make that energy poverty history under the UN Sustainable Development Goals by 2030, less than a decade away. In fact, it's around the corner. And I, for one, I'm a subscriber to the fact that energy poverty is a big priority for the African continent. And if we look at what is happening today with the impact of the COVID-19 pandemic on economic recovery and growth, I think it goes without saying that should be the top of Africa's agenda. So that's just one of the first things I wanted to lay out. And I think it's a question that I hope answers will unfold around later. The other thing I would say, which I think this report also highlights, is that any successful energy transition has to focus as much on the supply side as it will on the demand side. And I think Dean also laid it out quite clearly, some of the delicate balance in between the recovery in global demand and the availability of supply of energy or commodities, fossil fuels to meet that demand. If we look at the continent today, we have a supply crisis. We are obviously very large producers of hydrocarbons, Nigeria, Angola, Equatorial Guinea, Gabon, others. And that supply crisis is exacerbated all the more by the lack of adequate infrastructure to transport Africa's energy needs to its various consuming markets, whether that's large-scale industry, commercial and industrial, and even residential customers. And what we need to find is ways of securing investment to build out the infrastructure that will help Africa, number one, end energy poverty, become self-sufficient in terms of energy supply and consumption, so decreasing its reliance on imported energy. And that usually has come mostly in the form of imported hydrocarbons products, petroleum products. And then thirdly, trigger the large-scale industrialization and human development that this continent needs for generations to come. And I think those three key things are top of the agenda. And I think there are many issues that give me cause for concern. First of all, it's a pullback in investment from stakeholders around the world. And I have to point to a very interesting statement today that was made by Norway's Prime Minister around the net zero debate. And Norway is a country that has successfully built up a sovereign wealth pot of $1.4 trillion. And it's been able to build up that port because of the contribution of the oil and gas industry. to its national economy. And I think that's an element that shouldn't be missed. A successful energy transition will require the proper stewardship of a country's natural resources. And I think this is an important point to make, because here we have challenges facing upstream capital expenditure. That then means that government revenues are impacted in many oil-producing economies. And we know that there's competition for global capital. We've seen a retrenchment of global credit in many parts. And investors are not willing to have this conversation, certainly in the global north. Asia, we see, still has appetite for African oil and gas and energy broadly, as do parts of the Middle East, the Gulf, etc. But what it means is that on the continent, we actually have to raise our game. We know we have to have a seat at the table, but how do we raise our game? Governance and stewardship is key. And I hate continually drawing references to other parts of the world, but we have those models. We have to find the models that work for us. We're running out of time in ensuring that we put up the proper structures around regulation, governance, making the operating environment much more attractive. Because now more than ever, investors have every reason to say they wouldn't invest. So if we're competing in the broader pool of limited global capital, then we need to have all our ducks in a row. The other thing I would say is that every cloud has a silver lining. I think sometimes there's been a tendency to panic around the perceived imposition of a global agenda on the African continent. But the reality is it actually provides us a real opportunity. IOCs are pulling back from some frontier exploration pays. The question is, can the local and regional energy champions, homegrown within the African continent, rise up and take on this mantle? There's also the issue around stewardship and governance is environmental regulation. I've always subscribed to the fact that the environmental, social, and governance challenges that face the sector are not just around net zero or climate adaptation. They're also around how we use resources and proceeds from fossil fuel extraction to drive growth and industrialization in other parts of the economy, even that green growth that we're all very desperately pursuing. So for me, those would be some of the key things that I would say are top of the mind. One of the things that finally really struck out to me from this report was the reference to the value chain and the very, very lofty but well-received ambition by the African Energy Chamber to ensure that we capture a greater percentage of the mineral value chain, particularly battery minerals. And I think the African Energy Chamber is projecting 75% by 2050. And I think that is a laudable ambition. I think it is doable. It will require regional cooperation amongst the countries that mine and have an abundance of these resources and the ones that can provide support with the necessary infrastructure. So I think I remain optimistic. I remain more than cautiously optimistic. I'm actually really, really excited at the opportunity that this debate presents to us. But I think we have to make energy poverty history on the continent, and we have to do that as well within the resources we've been endowed with to do that, and of course take into account the environmental, social, and governance challenges that do face our continent as a result of climate change. Thank you.
Thank you so much for Rolake for a really, really great discourse on the outlook. I think you really speak to a lot of us, our soul. And I think as a lawyer, when you talk about regulation, my soul jumps. And I think that's something which is really not talked a lot about in the continent. But also, it is true. We are competing for capital, not just between, for example, Gabon and Ghana or Egypt and South Africa. We're competing for global capital. As you well mentioned, it's a limiting pool. It is between Nigeria, for example, and Guyana, or between Libya and maybe maybe the other countries in the Middle East. So we really need to step up our game, and maybe also it's time for us to hold a lot of our African players accountable. We can no longer have to wait to only think that those that invest in our industry have to come from Europe and America and Asia. Africans should be able to drill a well, to spot a well. Africans should be able to maybe source out local financing to drive, whether it is power projects or driving up different projects to really hit our target to make energy poverty history. As we go to Q&A, while we wait questions to come from various journalists that were very kind to join us today, I think I'll start with the first question. Based on the on where you see the outlook and you see our continent going towards 2022, what would you advise, number one, African explorers on how to view investments in Africa in 2022? Number two, what would you advise governments? I think Rolake has answered part of these questions on how to really embrace capital, and also some things they could change specifically in 2022 to really keep the market stable, encourage free markets, and also drive up an industry. And when I say an industry, it's not just oil and natural gas, but also whether it comes into the power sector as well, which is a critical component of whatever we have to do in the continent. I'll start in reverse. Maybe I'll start with Rolake, then to Nosiwe, and then to Dean.
Okay, thank you very much. I think from giving sort of my previous finance background, I think we really need to raise the game in putting together well-structured deals, because that's the reality. Money doesn't like uncertainty. And given that across most African countries, with a few exceptions, we know that the below ground risks, that's something companies are well attuned to dealing with, but the above ground risks, so, when it comes to the regulation, the ability to repatriate capital, the sanctity and stability of legislation or contractual terms, the fiscal environment and the economics of operating licenses, obtaining licenses, setting up a business, the day-to-day operational challenges. I think we often put that responsibility on government, but actually a well-structured deal in the local market, in the oil and gas space, or in the energy sector, in the power sector, has to have certain ingredients. And more, the reality is your social license to operate is just as important as your commercial license to operate. So one of the really important things we're hearing from investors beyond net zero and emissions is the local value chain. How much money are you taking off the table insofar as the local economy is concerned? And so in terms of your procurement, your contracting, your supply chain, how much of that is localized, right? Which allows you to retain value within a local economy. And I think for me, that is really key. We often think about the bankability of a deal around maybe offtake, the technology and these other elements. But I think the social bankability of a deal is actually really, really important. And I think in the work I'm doing with investors and financiers, these are questions on the minds of everyone. And of course, part of it then comes with the climate adaptation and mitigation thing. I think we often like to look at these transactions in silos. If it's a fossil fuel transaction, it's a fossil fuel transaction. But what are the complementarities with other parts of the value chain? So if we look at the power industry, for instance, to power Africa across all different segments, base load fossil fuels are still going to be very important, so gas to power. But we also know that for certain segments of the market, such as the residential or the smaller commercial and industrial segment, that renewables and solar PVs are becoming increasingly important. So how can I integrate my baseload gas to power project by empowering other parts of the market that may be perceived as cleaner? And I think these types of deals or constructs are the kinds of things that I think explorers need to bear in mind. And we need an in-house environmental, social, and governance function. And it can't be something that is peripheral to your business as an energy company on the African continent. It has to be core and central to what you do. So I think for me, on the explorer, or the investor side, or the operator side, that's what I would say, and I'll leave maybe some of the other responses to my panelists, fellow panel. Thank you.
Nosiwe, before you jump in, I would like to shift the question a little bit. You've been there right at the top with national oil company, and you've also worked in the private sector around Africa. Where do we go from here? Where do we find funding in this area of ESG, and how can we transform ourselves to step up our game and explore our continent?
Yeah, NJ, you have really thrown me the baton, right? So as a matter of fact, what I was going to state is that as we're seeing this trend where the INOX, the international companies are moving away from the fossil fuel investment and actually selling to the national oil companies, right? So it becomes very important for the national oil companies, as Rolake said, there must be some form of very astute deal structuring, and there must be, I still believe, some form of cooperation amongst the NOCs. The NOCs on the continent, I feel, are not cooperating as they should be. Some of them are at a mature level, others are not. But in terms of trying to raise finances in this climate of ESG, we already know that the traditional financiers are not partaking in hydrocarbon exploration, no green fields, no greenfield projects, and so on. So I think that there has to be this astute deal structuring that Rolake spoke about, but which must happen between the NOCs. As you know, the NOCs would be owned, let's say 100% by government. So it becomes therefore important for this type of discussion to actually happen at a G2G level. I think it's something that is new. It's a new way of approaching the solution to actually the investment. For example, look at Mozambique. They've got a certain percentage of the gas would be royalty gas belonging to the state of Mozambique, to government. South Africa is in need of a lot of gas because of our power deficit. So somewhere there should be a manner in which these two countries can be able to negotiate and say, look, we will put in and invest into more exploration in the country because we've got a need. And that's why when I keep talking about this regionalization of projects, it's simply because you can get better economies of scale when you regionalize these projects, and in fact, look at trying to regionalize even the manner in which the deals are structured, and trying to bring in the funding for these projects. So I know it's not easy. I know. You spoke about regulatory challenges. I understand. And that is why you also have to start having harmonization of regulations so that you can be able to have these cross-border collaboration in terms of financing these projects. If we don't do it ourselves on the continent, who is going to do it? Because everybody else is got agendas that are driven, let's say, by the ESG issues, by the COP20 climate control, and all these net zero issues, who is going to assist us at this point? So there has to be a coming together, even for the financing mechanisms between the NOCs, I would say. Thank you.
Nosiwe, thank you very much. I got bad news for you. No one will assist you. I think that the aid narrative, which we have seen, has not really helped us much. But Dean, I would like to shift the question a little bit. Given your experience from the API and seeing what you have in the United States with shale producers, that they are also seeing the same tsunami hit them when it comes to financing fossil fuels, and how has the US shale producers, especially the private sector, because you guys don't have national oil companies, how have they been able to play in the game with where we have a drive of ESG and also being with divestments coming out of the natural resource sector or fossil fuels? How have they? What lessons could African private sector draw from there, and how have you guys been able to do that in the United States?
Well, a few different thoughts. The first is earlier this year, API, the American Petroleum Institute, rolled out a climate action framework. So this is built off of 2 years ago, an environmental partnership formed by more than 90 companies that voluntarily participate to lower their own emissions through the value chain, starting in the upstream and then going through pipelines and midstream, and trying to make sure that, at least in terms of operations, that they're in the natural gas value chain, minimal methane emissions that are coming with that, and best practices being adopted. As part of the climate action framework, we're also advocating actively for a price to be placed on carbon, a market price. And the idea that you could enact an entire energy transition, incentivize new technologies to make the progress to sustain the kind of efficiencies and technological change the likes has not been sustained ever in global energy on an ongoing basis without a price on carbon will be very difficult. So there are kinds of problems that you can throw money at and ones that you can't. And right now we need market mechanisms to help work to solve these. Now, many of the E&Ps, the reason supply hasn't come back from my earlier comments is a combination of physical things. So the after effects of the COVID recession, they're real. For example, you have supply chain concerns where you can get things through ports. You have tariffs on steel. You have a shortage of truckers nationwide in the United States that makes it very difficult to move either the steel, the sand or proppant, and in some cases the water, the things that are required for unconventional oil and gas development to site. And I had one producer that came by the office the week before last and gave the example of having laid off so many people, and then when they went to recompile or put it back together a drilling rig crew, 2 days later they had to disband it because of COVID and the fact that they didn't have a bench strength of skilled workers out in the remote areas where they were drilling. So these are things that over time will improve, but it is taking time. Then there's the financing concern, and I think the excellent comments that the previous two panelists mentioned, these are the kinds of things of how do you finance an environment where you may not control your own destiny. And there's this razor's edge where we've gone as an industry in the last 6 years of being accused of destroying a lot of value and being a poor investment to, on a razor's edge, suddenly you are profiteering and you're making great profits, right, as prices have come up. And this is the first period where we're seeing some profitability, but when you look at the balance sheets, and Bloomberg's assessment is excellent of the oil and gas peer groups, either in North America or globally, and you can see that many of the companies, especially the smaller ones, took on extraordinary amounts of debt just to survive last year. So just to put this in context, historically, maybe you carried 30% of debt on your balance sheet. In the first half of this year, the North American gas peer group was over 50%. And if you get to 60%, nobody will lend to you. It's a hard line. So from an existential standpoint for many of these companies, they have to take actions to correct that. And I think that's a lesson for the self-determination part, if you're talking to E&Ps on the continent, of thinking of how do you secure your financing? And I would say to governments and E&Ps, actually, going back to the original question you asked here, thinking creatively about the deal structures together with risk mitigation, but thinking strategically about different kinds of partnerships and what kind of cooperations needed to motivate developments that are going to be sustainable and attract a flexible fiscal regime. The naysayers here to our industry and fossil fuels as a whole will say don't invest because demand won't be there. I'm very much of the belief that the data have told us both through the downturn and the recovery that the demand is clearly there to go with economic growth, and we know it especially that the substitutes for that are minimal across the African continent. So you need thermal sources of energy to stabilize and grow an electricity grid. The idea that we talk about, and the report talks about, and it was mentioned here, the load shedding episodes in South Africa, but this is not just an emerging market problem. We've seen it in California. We saw it in Texas in February during a winter storm. We see it in Europe right now with a natural gas shortage. As we contemplate shifting a lot off of thermal energy sources, the resiliency and the reliability of the grid is very much in question. And if you want to sustain economic development, especially with industry producing things, that becomes a serious challenge. So I would encourage companies and government to think about how to be proactive here, to use the instruments that are at their disposal to try to mitigate the risk and take a lead on lowering their own costs, because with the labor supply, this is Africa's greatest resource. It has people, whereas many of the populations across the world are becoming increasingly challenged. With a combination of people and technology and banks and business, this way was saying perhaps cooperation across national oil companies, you could take the lead in lowering your own costs and with self-determination, bringing more development across the continent. So understanding those dependencies, the ability to bring those domestic resources to bear, this is a way of thinking. And I guess the last part of this is the companies in North America that are pulling themselves up by their bootstraps, having survived this downturn, are stronger with the practices that they have on the back end of this. The service companies are actively looking internationally to cooperate and find ways to develop new resources and new relationships. I think it's an opportune time actually for the continent to bridge to the United States and really think about commercial relationships that can help unlock this potential. I'll end there. Thank you.
Thank you so much, Dean. I got a question, and I'm going to read it from the chat box for Rolake. It comes from Sir John. So Rolake, be careful, okay? This is dignitary. Okay, so it says the Paris Agreement allows sovereign governments to declare what steps within their capabilities they will take towards net zero. While this effort is somewhat unconcerted among African countries, what can you, or what would you advise that they do to streamline and roadmap a realistic and more palatable, I like that word, palatable, balance that assures energy poverty is addressed while working towards energy transition and net zero goals? Rolake, that comes from Sir, so God save the Queen, and he wants a palatable answer. So I'll throw that to you.
All right, thank you very much, NJ, and thanks, John. Wow, that's quite a big and a loaded question. The reality is, silence is acquiescence. There's a global context, and there's an expectation and a response that is required of African leaders vis-a-vis the Paris agreements, and particularly ahead of COP26. We do need a realistic timetable. I think most African governments who are pragmatic can agree that an energy transition is already in full swing. Anybody who is denying that probably doesn't live in the real world. I think that's a fair assumption to make. The challenge with reaching a consensus, as in bringing one African voice, is that even within the continent, we all have different economic and national priorities. There are some countries on the continent today that are fully well on their way to harnessing their gas resources, and I've been doing so, and I've even been supplying gas across the border, SA Mozambique pipeline, notwithstanding some of the challenges around that piece of regional infrastructure. So what I think the continent needs to quickly do is to find the areas of commonality. The reality is that most large-scale gas projects that are taking place on the African continent today, the really, really big ones, have a cross-border dimension. So insofar as those projects are concerned, there is a strategic imperative and consensus which most of the leading political or government players on the continent can reach. We have to harness these resources because they are relevant for our economy. So what are these big national project priorities, and what are the commonalities, and how do they contribute to our economic goals? And that's just an example. We can do that across a whole range of other types of projects. Having then identified these major national and regional economic priorities, how do they then fit into the broader global agenda? And I think part of it is the devil is always in the detail. We're missing the detail and nuance. So if you're talking at a global or regional level, is what is it that is really important to the African continent today? Let us schedule out that into some sort of transition plan. And mind you, any timetable that is given has to be fluid. And the reason I say it has to be fluid, look at the impact of COVID-19, right? So you have to account for the fact that there may be these black swan events, highly unlikely, but huge impact if they do happen, that can alter what our national economic priorities need to be today. And I think the worst thing for African governments to do would be to lock themselves into a timetable that will not become relevant 2 or 3 years down the line. Now, how you achieve that balance, is always going to be a difficult one, but at least start with identifying those projects that are of strategic national importance, whether it's gas, whatever that may be. It could even be things like the West Africa Power Pool. What is contributing? What is the largest source of generation? It could be the Southern Africa Power Pool. What is the largest source of generation for that particular project? And if we agree that it's a regional project of priority, then whatever we agree to with regards to COP26 cannot undermine that priority. And I don't know if our African leaders are having that level of nuance, but I think this is the type of leadership we need, and this is how we need to approach scheduling our compliance, if you like, with the climate agenda.
Thank you, Rolake, for that. I could say on the chamber side, thanks to you and many others, we have been engaging and having conversations, whether it's with the African Development Bank, the United Nations Economic Commission for Africa, Afro-Exim Bank, and on others on this issue. And I think that after COP26, we are going to see even a more and more bigger dialogue on this issue. Dean, I got one for you from Calvin and Abba, and basically there are two questions. One is, what technologies should explorers be using today when to explore, and at the same time maybe still reduce their carbon footprint while exploring for oil and natural gas? And the second one, which I think you would be actually the most appropriate person on this, it comes from a gentleman that says, maybe a lady, I'm not really saying the full question, but that it's Stellenbosch University in South Africa. They had a report that stated that if we use wind power, Africa we could eradicate energy poverty by 2030. And I asked this question on the wind issue because I know the United States, for example, the state of Texas, has some of the largest wind farms. What would be your opinion of that as per the question? Sorry for throwing you a double whammy.
No, those are great questions. On the exploration side, I think the industry has moved forward. This is why when we look at the productivity that we've seen, especially across the shale operations, but I think internationally, the service companies have continued to automate. They've continued to use digital technologies and big data in ways that previously, 5 and 10 years ago, they didn't. And this has showed up in lower costs and more production for every dollar spent. So the technology is there, and it's, to relate it back to the question we were saying, well, what do you do to lower your carbon footprint in the process? Once you've identified your resources, then having the right technology to bring it to bear. And there will be different configurations you can choose in terms of, is it going to be, well, one, are you talking shallow or deep water? Is it onshore? And then if so, what are the most cost-effective ways of bringing that? Flaring continues to be an issue globally, and the industry is making efforts and has every economic incentive to try to reduce flaring, but that continues to be part of the debate and something that it's not a high-tech issue, but we see that where new technology is being deployed in places like Egypt to try to take existing fields and make sure that the emissions are captured there. So from an E&P perspective, being sensitive to those concerns, being cost effective, being nimble, and making sure that it goes through the value chain are all in play. Now, in terms of wind and solar both have tremendous potential. They've become much more cost effective than historically they were. And even without subsidies, in many places, if the sun shines brightly or the wind is strong, and NJ, as you mentioned, West Texas is an awesome place for wind. So is Oklahoma, just north of there. But go back to February, and what happened was we had a week or two period where the wind didn't blow very much. And in a at the same time as you had an extreme winter cold scenario, the grid was left short of power. So storage solutions, it's not just nameplate capacity here. And by the way, when you invest, if you invest in that much wind or solar, you're likely increasing your dependence on China or another source in the process, unless you have the value chain domestically to produce these things. So you have power for as long as that thing lasts, and then you are beholden to somebody else to buy the equipment again, unless and until you can produce it domestically. But even when you have it, the grid resilience and reliability isn't necessarily there unless you either have the thermal ability to ramp up and down, say, historically oil-based, especially now natural gas-based, but natural gas, that's the role it plays in complementing renewables in the power sector, where you bring the ability to ramp up the percentage that are renewable because you have this flexible ability that's the equivalent of having storage. And at this point, utility scale storage is not only orders of magnitude more expensive than having, say, natural gas or coal as a backup, but on top of that, just the sheer ability to do it. If you want storage for just a few minutes or a few hours, it's one cost level. And if you want storage for 2 weeks, it becomes basically exponentially higher costs and very difficult to achieve. So therein lie the challenges where in the United States, we're grappling with when you go from 20% to 40% renewables in the mix, you have one cost level. When you go to 40 to 60 or 70, you get a different cost level. If you want 80%, wow, it's going up a lot. And if you want 100% renewable, your costs have gone up stratospherically. And you don't have storage technology today that can make that happen. So if the United States, with its resources, is struggling to achieve that and is having reliability concerns and load shedding and all of the things that you see, if that's the leading edge of it and Europe's headed there now, don't sign up for that. You have the ability with your domestic resources to have a self-determination where this is part of a healthy mix. And the question is, what's the right mix together to assure that there's reliability through the grid that helps the economic growth and the human economic development? Rolake's recollection of needing to alleviate energy poverty in a near-term time frame, or at least keep that side by side, is one of the things that absolutely must be addressed as you consider an energy transition, as you consider plans for domestic development or continental development of resources. These are important considerations where it's very easy to get lost in the global mix and the politics that go with the energy transition, where it's viewed as an existential crisis without which that must be solved at any cost. And there's a prevailing wisdom globally right now that we're in an era where money has been free. We've been able to pump a lot of liquidity in on an emergency basis globally without much of a repercussion. But there's a real debate going on among central banks around the world about how much price inflation is likely to be temporary as opposed to more enduring. And if I'm of the view, much from the oil and gas perspective, that the industry and energy in general have been misunderstood in terms of the sheer scale of energy systems and how long it takes to correct them. So all of those, as you're contemplating a renewable strategy for the continent, I think have to be considerations that you take into play here.
Thank you, Dean. I think we'll have one last one for Nosiwe. Actually, two questions. One from a gentleman called Leon. He apparently is unemployed. He's asking, does clean energy generate more employment than fossil fuels? Leon wants to know that. And I don't know why he picked you, but he really wants to know that from you, Nosiwe. And the second one, also, it is another question also from Elvis. It says, what will it take? Basically, to sum it up, would say, what will it take to get us to net zero starting from 2022? I think a lot of that has been discussed, but would like to draw your answer to it. And if you look at the camera and you're seeing Leon, tell him our industry is good. It's not a really bad industry.
Thank you. Thanks for that question, Leon. Look, the first question is about, does clean energy generate more jobs than energy from fossil fuels? I think that's what the question was. And I think maybe, let me answer it practically in this way. Recently in South Africa, it's been stipulated that you can produce 100 megawatts of fuel without requiring a NERSA license. So what that actually does is that it starts to create new opportunities for, let's say, new, shall I call them, energy entrepreneurs, to be able to, to join the energy industry. So that's something that's practical at the moment right now. And I mean, you could generate those 100 megawatts using whatever means in terms of the types of energy generation modes. Now, when we talk about fossil fuels, because fossil fuels, you go from, upstream, midstream, downstream, in terms of other energy, let's say if you're producing liquid fuels. So you've got, let's say you've got fixed investments that are made that have to be managed, like your refineries, like your rigs, and so on and so forth. So if we look at it before, let's say a couple of years ago, you might say, because the fossil fuel production value chain was mature, you could say that at that point it was creating more jobs than clean energy. But I think that is now starting to change, because you will find that from a clean energy perspective, you've got different you've got to have a supply chain, as been mentioned earlier. And if you are in a position in that your host country, wherever the energy is being produced, to be able to actually manufacture what is required for the clean energy, to produce the clean energy, then you are starting to have an impact on jobs. If you are doing the what I think Dean mentioned, Texas, they were importing, the wind equipment from China, then you're not producing the jobs in your host country. So I would say that if you've got a robust supply chain, you are then creating jobs, not only for the production of the clean energy, but also for the implements that are utilized in the clean energy. Your PV, your photovoltaic, I can never say that word properly. Your PV panels, if you're producing them in your country, then perhaps you are creating jobs. So I think it's not a yes no type of answer. It depends on whether you've got your supply chain and your implements being produced in that country. And I think that's what I'd say on the first question. And then I think we've spoken a bit about what it'll take for us to get to net zero. And I think Rolaki spoke about that quite in detail. And maybe what I'll just say is that it requires a lot of cooperation, a lot of policy issues, a lot of understanding your timeline from a perspective of your economic development in the country. It also depends on your maturity. What level of maturity is the economy of the country at? But I cannot pinpoint and say exactly how long will it take for. You didn't mention when you said us. I take it you mean the world, as it were. The world has set a target. They've set a target of net zero globally, and we are saying that maybe it has to be staggered in different areas depending on the level of the economic development in each country. And that's what we started speaking about in the beginning, to say a lot of countries in Africa are currently struggling to utilize their resources so that they can at least provide energy in the country. And those are emitters and might hamper their progress of actually getting to net zero at the same time as it's expected globally. So I think NJ also spoke about how interesting the next 2022 is going to be, because there are going to be a lot of global conversations in terms of this. And it is felt that Africa should go with a view to actually influence what they would like to do in terms of their journey towards net zero. Thank you.
Thank you, Nosiwe. And I want to use this to really thank Dean. I want to thank Rolaki. I want to thank Nosiwe for joining us. This has been an amazing conversation. One of the good things about this is actually the first time I've ever moderated an event anywhere. I'm always doing the talking. So I think my staff figured out how to shut me up, so they asked me to ask the questions, and that is actually good. But I want to thank a lot of the journalists that have they tuned in to the launching of this Outlook. I think it's been really amazing support from the media. We at the African Energy Chamber, we could not have done this without friends from the media. Sometimes a lot of them don't agree with us. Sometimes they don't even agree with us on the weather. But I think that we must give credit to the media. They have always respected our views. They have always tried to sort out different opinions, whether it is big media or small media, but they have always paid attention to what the chamber says, and I cannot thank you enough. As you go forward, we invite you to look at our Outlook. I think you would learn a lot. Feel free to be critical of our views. Feel free to be critical of what, I don't think there's anything to criticize about us. You in the media love us so much. We just give you the best thing you could do. Look at the amount of research. If you guys even try to pay for that, your media organizations don't have the money to do it. So we're doing the job for you. But I leave you guys with this. Dr. King taught us that the arc of a moral universe is long, but it bends toward justice. But it doesn't bend by itself. You know, I think Dr. King, while he was right, I think we have to bend it towards justice. We have to shape it towards justice. And sometimes we are going to hit rough edges and it's going to get dark sometimes. But it's the job that we do day in, day out, shaping Africa, driving issues around energy poverty. And that's why I invite everybody, whether you can afford it to go to Glasgow or you can tune in, get informed, and join the debate. This is no time for us to sit idle by and not participate. The energy industry is no longer an industry that is just for the elites. It's for the industry, it's an industry for all of us, because we as Africans are the ones who are always left behind when it comes to energy matters. When we have more people educated and participate, then that means that we have active citizenry. And when citizens are active, the elites who drink latte and point their little fingers at the ARDOS will have to pay attention. Thank you so much. Go out there on our website, download the Outlook. You'll be shocked by the findings, but it's really amazing work. I want to thank Dean for getting up early in the morning. In the United States, we can't afford to buy him coffee, but he's always there. Noziwe is going to charge me for coffee when she sees me, but I have not seen her for over 2 years, so I'm looking forward to giving her a hug at Africa Energy Week. And if you can make it, come to Cape Town, the mother city, for Africa Energy Week in Cape Town. Thank you so much and all the best, and please stay safe.